This is interesting. This is something that not a lot of people understand. Smart money, smart investors, they get it, they like it, but the average everyday person, they are just starting to wake up to this fact, which is why did investors get insanely wealthy during the invention of the internet, the big internet bubble days? Well, it wasn't because investors owned the internet. I mean, who owns the internet? Nobody. People got insanely wealthy once they could build on top of the internet, once they could bring the people, the traffic, people using Gmail or creating a website. Those are the people that got wealthy. Now, here's what people don't understand today. Bitcoin is the first time you can invest in the underlying protocol. Listen to this.
It's actually a technology that you can invest in and capitalize on.
Right. A lot of people, they equate this with the dot-com era. In the dot-com era, the protocol of the web was established, and on top were applications.
Exactly.
In the Bitcoin era, the protocol is the application. The protocol is the thing, right? I mean, if you could have bought stock or been an equity participant or bought shares in the concept of email back in 1995.
Oh my gosh, SMTP. If you owned SMTP, you'd be a very rich person.
Right, you would want to.
Yes, we definitely want to. And
right, so now with Bitcoin, you have that opportunity. You're owning a piece of the protocol.
Look,
that's dominating.
Tim Berners-Lee invented the World Wide Web, right? He took TCP/IP, which Vint Cerf and a bunch of others created in 1974, took it until 1991 to write the first web page. Today we have billions of web pages, but he wrote the first one. So he invented the World Wide Web, not Al Gore, right? So he's not a rich guy. He does fine. He's a Harvard prof. He's actually got a new Bitcoin or a new blockchain startup that could be interesting, but he should be really, really wealthy. But to your point, the applications guys, the Zucks, et cetera, became the really rich guys. In the Bitcoin era, I think the protocols, to your point, will make a lot of money. I think eventually dApps and DeFi and other things will make money too, but the protocols are going to make a lot of money.
Yes. I like this. This, of course, the Max Keiser Report, link down below in the description for the full episode. But I wanted you to see this. This is the first time the average person can invest in the underlying protocol. What do you think? Let me know down below in the comment section. Hey, by the way, my name's Austin. We cover the daily news of the crypto market on this channel. That's why you subscribe. Before we get to a potential critical flaw that KRAKEN found in Trezor wallets, I want to talk about Brexit and Bitcoin. Because as of today, Brexit arrived. What does this mean for you as a Bitcoin holder? Well, after years in the making, Brexit is finally happening tomorrow, meaning today. This was written yesterday. The event is expected to cause a major shift in the global economy and could bring about any number of unforeseen consequences. So, love it or hate it, after 4 years of referendums, 4 years of political arguments, delays, and non-stop negotiations from the UK and EU officials on how to best achieve the dissolution of the UK's membership in the EU, this finally became a reality. And here's the interesting thing. A coin is being created, not a Bitcoin, but the UK is set to roll out a new Brexit coin. Will you buy it? Will you spend it? Well, it's a coin to commemorate the event, despite Remainers saying they will not accept it. So other than a shiny new coin, what else will change with Brexit? What else will change for you? Because anytime we have any sort of political government uncertainty, usually that bodes well for Bitcoin. Well, here are the facts. This is what it will actually do. For starters, all the UK members from the EU Parliament will lose their seats, right? They are exiting the EU. The UK's passports will change colors from the standard issue burgundy passport to a blue and gold design, which hasn't been used since 1912. And really, I mean, it's really the people that are UK citizens but are working in the EU that might have problems, although they're trying to smooth that over. But the truth is, this is going to cause a lot of headaches to a lot of people, but nothing the day of. Just like the halving, Brexit, like Bitcoin's halving, it may take months to see any effect, if any, to be felt for Bitcoin holders or for cryptocurrency. What's going to be interesting to me is watch the news, stay informed. Will this cause more pain or more productivity for EU and the UK in general? Whatever it is, Brexit arrived today, and I wanted you to know. Next piece of news, the National Bank of Cambodia will launch a digital payments network this quarter. This is happening this quarter. The National Bank of Cambodia's new digital currency is called Vechain. It's effectively a central bank digital currency, CBDC, that was launched on a trial basis throughout Cambodia in July, while Keiser Report, the Director General of the National Bank of Cambodia, the head honcho around there, said the system will be operational within the present fiscal quarter. Report describes Vechain as the national payment gateway for Cambodia. So here's why, in a direct quote, here's why Cambodia, at least the banks, here's why the banks want this. Vechain will play a central role in bringing all players in the payment space in Cambodia under the same platform, making it easy for end users to pay each other regardless of the institutions they bank with. Eventually, we hope to allow cross-border payments through the Vechain system too. So for Cambodians, the banks want this to be your peer-to-peer method of payment, as well as your cross-border payment. This is nothing new, but really this is Cambodia saying a big screw you to Bitcoin. They're trying to make their own Bitcoin, but it's very different. Unlike most blockchain-driven cryptocurrencies, Vechain is a closed system that's backed by banking authorities. A software wallet is linked to each user's bank account for them to more easily interact with hard currency. The system supports real-time transactions, while the National Bank of Cambodia stores centralized records about where that money goes. So this will be implemented this quarter. The battle rages on. I mean, hopefully some citizens in Cambodia will realize Bitcoin is their peaceful way to opt out. Hopefully. For our Cambodia audience listening, comment down below. But next piece of news, and this was a little troubling, a little red flag for Trezor that KRAKEN found. Check this out. KRAKEN Security Labs has identified a critical security issue in Trezor hardware wallets, which enables seeds to be extracted from the device. So if you use Trezor, this is what you need to know. KRAKEN researchers claim they were able to access Trezor 1 and T-wallet keys by manipulating the voltage in the microcontroller. These hardware components hold vital information such as seeds, yet are not designed for such purposes. So if you're worried about a hacker, this is what you need to watch out for. If a hacker was trying to access your private keys, to exploit this bug, an attacker would need access to the physical device, so to your physical hardware wallet, which by definition limits the seriousness of this threat since you're the only one that knows where your hardware wallet is. But nevertheless, devices designed to crack Trezor wallets using this procedure could easily be made. Overall, the KRAKEN team stated that it only takes 15 minutes to exploit this flaw using specialized equipment. So, Ledger and Trezor, hardware wallets in general, they are one of the safest places to store your Bitcoin. They're not perfect, and you could always memorize your private key phrase. Your money would still be stored on the blockchain, and you wouldn't even need a hardware wallet. That's pretty hardcore for the average person. But either way, this isn't a reason to switch hardware wallets. Trezor is very aware that this happened. I'm going to link this down below in the description. Check it out. They have everything under control, but it's just something to be aware of if you have your hardware wallet just laying out willy-nilly on the kitchen counter. Last piece of news, for people saying the coronavirus has absolutely no effect on Bitcoin, well, I think this article begs to differ. Coronavirus controls, the controls that are being implemented because of this virus in China are actually delaying crypto miner deliveries. So the people that are trying to mine crypto, they're having trouble getting their gear. 2 leading manufacturers of crypto mining hardware notified customers that their shipment would be delayed at least a week because of the coronavirus quarantine in China. This week, MicroBT, Bitmain, and InnoSilicon notified its customers, possibly you, if you live in China, the application-specific integrated circuits, or ASICs. The ASICs they ordered would not be immediately sent. And why is this? Well, it's because the Chinese government extended New Year's holiday hours due to the outbreak. So they're not completely closed down, they're just still on holiday hours. Hey, hope everybody's okay over there. If you notice my voice is a little hoarse today, it's just sinuses. I have not caught the coronavirus. I have not caught the coronavirus. Just sinuses. Just sinuses. But that is the video for today. My name's Austin. Leave me a comment. Leave me a comment. Say hey. And like always, I'll see you tomorrow.